Canada's real estate price decline could be one of the largest in the world, according to a credit ratings agency called Fitch. So let's see exactly what they're saying and dive into the data here. So things are about to get worse for Canadian real estate, according to a credit rating giant. Fitch Ratings dropped its latest analysis to clients on risk in the mortgage bond market. You know, this is something I've been saying for a long time on this channel, that the risk in the mortgage market is really what people aren't focusing on, because it's the fact that these mortgages aren't going to be paid back. It's the fact that people are relying on the greater fool theory. It's the fact that people are going long on the Canadian economy by buying a home without even realizing it, because they're buying within a bubble and they can lose that home even if they make the payments. You have to renew every 5 years in Canada, and if you renew and your home price has gone down 30-40%, you could be absolutely screwed, because most people haven't got that money. We know that for sure. So the agency's analysis shows high-flying global real estate prices are likely to correct, with Canada expected to experience one of the biggest booms and busts in the world. Rising mortgage rates and deteriorating economic conditions are seen driving the delinquency rate higher, but not above pre-2020 levels. And I do think we'll get above pre-2020 levels. Their outlook a little bit rosy there. The delinquency rate is likely to go higher from here. I mean, it already is going higher, and we're already starting to see things fall off the rails. We just had a GDP report that came out, and GDP essentially stalled in the final quarter of 2022. And you have to remember, they deflate that using the CPI number. And we know inflation is a lot higher than the government is telling us, specifically Statistics Canada. Mortgage payments are on the rise, providing a little stress for a share of households. The agency found fixed rate mortgage borrowers have seen monthly payments rise $300 on average. Variable rate mortgage borrowers took a bigger hit, with an average increase of $700 per month. That is a big increase for a household to take on board, considering how high inflation is. And even though inflation has come down, inflation still remains highly elevated. And I think that's going to continue, because it has been continuing for the past 10 years. This isn't just a recent thing, as we'll get into further in this video. They're not presenting it as if it's going to be something that's a big deal. Every article that I come across points to the same thing, and even they point to it right here, and we're going to go into it and pull this apart. So not as many people are exposed to variable rate mortgages, and many experienced a boost in savings. Now, this is something that I hear time and time again. The mainstream media comes out and says, oh, a boost in savings. Nobody questions it. Oh, everybody's got more savings. That makes total sense. The economy is going to be fine. Don't worry about it. So if we go to the household savings rate now, you can see that it has dropped substantially, and it is still elevated compared to prior history, depending on how far you actually extrapolate this chart, because if you go back to the 80s, then this is really low. But if you have it just on a 25-year chart, you can see that it does remain elevated. But it remains really elevated among the more wealthy individuals in society. And they are representing like 10% of people in the economy. So the reality is, this isn't really an accurate representation in my mind of what's going on in the overall economy. You don't have to just take my word for it as well. You can look at what we went through the other day, that households are piling up credit card debt. I mean, credit cards, these are the last resort in terms of places where people are going to go. Credit cards are charging massive interest rates, and on a year-over-year basis, credit card debt grew at 13.8%. So that is a substantial number. You can't argue with the data out there that is pointing to the fact that people don't have as much savings as the mainstream media keeps talking about. It's not just Fitch, it's not just Better Dwelling, it's all the mainstream organizations, which I'll show you as well. I wanted to quickly just glance across this as well. Office and mixed use defaults drive US CMBS delinquency rate higher in January. They're talking about commercial mortgage-backed securities. That's just a completely separate issue, which I've actually discussed on this channel multiple times, and this is going to be a big problem in the future. You've got tons and tons of unoccupied offices across the country, and people refuse to acknowledge that this is a massive problem, because the reality is these buildings are very, very expensive, and somebody is paying the maintenance costs and the overheads for that space to be empty. And eventually those chickens are going to come home to roost. And then I also want to go across to my favorite inflation chart, which is this shadow stats inflation chart, which is based on the 1980 CPI. And you can see that even though inflation has come down from like 17-18%, you're still around 14.5%. So the CPIU, you can see, is the red line. That represents basically the inflation basket that we have right now. This is based on the US, but Canada follows the US pretty much. The economies are tied at the hip, so you can use this, apply it to Canada too. Essentially, you can see how the 1980s based CPI, the blue line, it essentially follows the same trajectory as the red line. It's just the red line, the CPI, is understating the inflation that we actually have. So we still have massively rampant inflation, and people just don't get it. Like, this is eroding the household balance sheet faster and faster, month by month. Things are just getting worse and worse without people realizing. And you know what's really funny about this is I saw this come out, and you know, you have to laugh when you read things like this. Canada's economy starts year strong after surprise quarterly stall. And it's almost like this article was constructed before the report even came out for the Q4 GDP, because it came out so quickly. Key talking points in this article that I want to go through. Canadian consumers are one of the bright spots in the economy. However, household spending rose 2% annualized in the fourth quarter, with disposable income up 12.4% and the household savings rate reaching 6% from 5% previously. And I have no idea where they're getting that disposable income number from, but it's quite frankly just completely out of touch with reality. We'll go through the income numbers in a second here. If household spending, let's say, is up 5% year over year, and then they're going, oh, this is great, the Canadian economy very resilient right now. You have to remember that these retail sales numbers, they're not adjusted for inflation. And when you've got 15% inflation, you know that actually the real decline in consumer spending is actually 10%. The way the mainstream media is publishing all this soft landing, no landing BS is really, really funny right now, and it's what you would want to see in terms of this area in the bubble where we are right now, in this denial / return to normal phase that I believe we're in right now. And then if you go over and actually look at the hourly wages since January last year, they're up like 4 or 5%. I mean, adjusted for inflation, again, real income is down like 10%. That is absolutely insane. Say that retail sales, okay, like retail spending is up about 5% year over year, then guess what? That makes total sense, because people's wages, they're not actually rising. The nominal wage, yeah, that went up 5%, but the decline because of inflation being at 15% is more like 10%. And you know, those core items are still rising in prices, as we discussed on the video that we did last week. Food inflation still remains insanely elevated. This has got to be what the yield curve is referring to. I mean, they keep going on about this soft landing, no landing, but the yield curve's not saying that at all, and that gives me an extreme degree of confidence. So we'll see what happens here. If you've enjoyed this video, you might like this video here. You might also like that video there. Thank you so much for watching and being here and supporting the channel. I love reading your comments. I'll see you in the next one. Take care.